What's up, everybody? In today's video, we're going to be doing some technical analysis on Aapl today, ticker symbol AAPL. We're going to be looking at multiple time frames and just seeing, is it the best time to be buying right now, or should we be waiting for key levels to be hit or potential breakouts? Let's go ahead and hop right into it. All right, welcome back. The first thing that I want to point out is something that's very important to chartists. And this is right here a relative performance to the SPY. We're looking at XLK, which is the technology sector over SPY. The reason why I'm pointing this out is because obviously, clearly, since really we saw a huge move in February, even March, but all the way back till 2019, you can just see this monster run up that the relative performance for the technology sector has been just relentlessly strong. And now what we're starting to see is a little bit of a downdraft here where we're seeing relative strength kind of dying off, and we're seeing right here on the that's on the RSI, and then we see right here we're starting to see it cross, kind of making lower highs. So we've seen a huge run, and what this is telling me is we could potentially be seeing a rotation out of the technology sector and seeing more performance in other areas. So we got to keep this in mind while going through the analysis. This helps build a little good framework. All right, so now let's hop into the monthly time frame, just to kind of see from a big point where we stand. Monthly time frame RSI is overbought. That's okay. Things could stay overbought for a very long time. We're disconnected from the 5 EMA, the most frequently tagged moving average typically. So once we get extensions from that, we really tag it back very quickly. Now the month's almost coming to an end. This is going to move up if the price action stays above. The blue shaded area is the Bollinger Band. I like using these two overlays on these time frames. We're not quite overextended there yet. Now, what I want to point out is all these blue lines. These blue lines right here is the Fibonacci retracement tool. Where am I measuring it from? Well, we had this big run up right here, and I'm measuring it from the pullback right here at 52.27. Okay, and then it's measuring from the peak right here at 138.43. And you can see right here that when we pulled back from that peak, we landed right here on the 38.2 fib level. That's 105.52. And then what do you know? The next month we gapped above the 23.26, and we've been holding above that area. The most frequently watched fib levels on these retracements is typically the 38.2 and the 61.8. Now, that doesn't mean that we can't see other levels hit and see resistance and support and so forth, but 61.8 is a big one and 38.2. Look for the possibility. The reason why I'm showing you these levels right now is because if we have a dramatic pullback, you can look at these key levels for buying opportunities. So, for example, if Aapl just completely falls apart, notice how the 61.8 fib level is down here at 85.18, and you see the 20-period monthly moving average sloping up. That's the middle of the Bollinger Band. That will find a lot of support in this area. So when the world's all falling apart, or if it falls apart, you can look at these levels here to potentially pick up some bounces. Other than that, if you're looking for more short-term, the 38.2 on 105 looks like a pretty decent level there too. And there's previous areas right here that have clearly acted as resistance, support for 4 months straight. Right, but that's the monthly time frame. That's a little bit longer look. Now the weekly time frame, I want to point out relative strength also dying off, but that's okay because we're not making new highs. Now if we do make a new high, it's going to do so on relatively weak strength. That's a negative divergence. You have Aapl right here, relative performance to the SPY or the SPX. Notice how it's slightly kind of drifting down, hasn't quite picked up a stronger performance. Maybe in this, since the end of November to December, it's relatively stronger than the SPX. But we got to keep an eye on this. This looks very similar to the first chart I showed, where if this is rotating out, we got to be very careful. Then I have the indicator down here, the CMF, chicken money flow. And what I want to show here is just the negative divergence, and it's constantly just trending downward. So if we start making new highs here, and we're not seeing stronger strength here, it's something to note. Doesn't mean that it can't diverge for a long time, but it is something to take note of. All right. And we'll go over some key levels here on the daily time frame. Key levels on the daily time frame. We're looking at right around 131 for a potential breakout. If we get over 131, the next area of resistance will be the high, which is right around 138. Okay, if we can get above there, we might be and hold that. That could be a good potential opportunity for a breakout play. Now, keep in mind the context here. First off, I have these pink lines. Notice how each pink line goes higher and higher. So we're having higher lows built. Higher high, lower high, and then all of a sudden a higher high than this one. So we're kind of seeing some jagged movement right here. This is, to me, a lot of chop back and forth. And what I wanted to overlay here was the 20 period moving average and the 50 period moving average are kind of trending sideways too. So this is just market noise. This is chop. So you got to be very careful in chop because things can get pretty crazy. That's why I marked out a couple levels here. Clearly support is right around 106, 108, that zone right here. You can see that when we broke above it, we started moving higher, tested, and now we're starting to put in higher highs. If we start breaking above this and start basing out or a full-on breakout, that could be very strong for Apple stock. But remember the relative strength. The relative strength has to get stronger in order to really believe a breakout like that. So let's zoom in even more. This is the 2-hour time frame. A couple things that I want to pay attention here. This is more shorter term. See this pink box right here? That's more of a target zone. Notice the blue line, okay, squiggling down. That's the 50 period moving average. It acted as some sort of support. Over here. See a pullback, acted as support. Now we're continuing to drift higher. Okay, so the 200 period sloping up, 50 period sloping up. That's bullish context. Now the price action just jammed on the 20. If we start breaking down, this area of confluence would make sense for a potential bounce opportunity. Why? Because, well, we bounce here, we bounce here, we bounce here, and now we have the 50 period and this trend line potentially moving down into. Now, if we start breaking through that, start looking at the 200 period moving average at about 120, because that could be the next breakdown potential. There's a lot of chop here, so it's very, very hard to determine whether you should be going long or whether you should be going short or just potentially waiting to buy in. Those are the key levels that I'm looking at for. Hope this analysis helps you in your investment decisions. See you later.